as it starts. We have at least 5 trustees on the line, so we should be good. And Deanna, when you take the roll, make sure you get the township or location of the trustees.
Gotcha. Yep. Thank you.
Thank you.
All right, we'll call this meeting of the Genesee County Employees Retirement System to order for the Monday, November 9th meeting at 1 p.m. Right now it is 1:01 p.m. Madam Clerk, will you take the roll, and if everyone could give their physical location along with their presence.
Okay, Brandon.
Here in Genesee County at the Administration Building.
Okay, Carpenter.
Here, Mount Morris Township.
Okay, Courts.
I'm at home. Okay.
The courts, Iosco County, yes, here.
What, can you repeat that? I'm sorry, Miss.
Hale, Michigan, here.
Okay, thank you. Cipher.
Jeff Seifert here, and I'm coming from Grand Blanc Township, Michigan.
Con. Okay. Mandalaris.
Here, Flint Township.
Which township? I'm sorry, you cut out.
Flint Township.
Flint, got it. Russell.
Dan Russell, Flynn Township.
Simpson.
Here, Genesee County Admin Building.
And Young.
Here, Genesee County Administration Building in my office.
Okay.
All right, this time we have set aside for public address. Do we have any communications?
We do not.
All right, moving on to communication items. First thing on the agenda, Deb Hankins' testimonial for appreciation. If everybody bear with me, I'll read this. It's a testimonial resolution of appreciation for Deborah Hankins, dated today's date, November 9th, 2020. Whereas Deborah has faithfully served Genesee County from June 9th, 1993, and the Genesee County Employees Retirement System as a Retirement Services Assistant from June 29th, 1998 to November 25th of this year. And whereas Deborah has displayed a deep understanding of the retirement system to better serve the members and beneficiaries of the retirement system. And whereas Deborah carried out her responsibilities with dedication, sincerity, scholarship, hard work, and honor, and has provided distinguished service to the Retirement Commission and the members and beneficiaries of the retirement system. Whereas the Retirement Commission, the members and beneficiaries of the retirement system, the county employees and citizenry owe a debt of gratitude to Deborah for her dedication and service to the retirement system. Therefore, be it resolved that the Retirement Commission, on behalf of itself and all concerned, hereby expresses gratitude and appreciation to Deborah Hankins for her honorable and distinguished service to the retirement system. Be it further resolved that the Retirement Commission, on behalf of all aforementioned parties, say thank you for a job well done and expresses best wishes to Deborah Hankins, along with the remainder, that she will always be welcome in future of the Retirement Commission. I'd like to thank Deborah for decades of service. Thank you very much.
And this is Jennifer. I would like to thank Debbie personally for assisting me in the transition in the retirement office. Trustees took up a collection and would like to present Debbie with a beautiful crystal mantle clock and a gift card. And we would like to thank you for your 22 years of service and dedication. And Debbie is here to accept it. Thank you.
Congratulations. Happy retirement.
Thank you. And we are going to,
everybody.
we're going to have pizza and cupcakes on the 25th, and I'll send out an invite to everyone if they want to stop by.
Okay, thank you.
Congratulations.
Congratulations, Debbie.
What time?
Thank you.
What time on the 25th?
It's going to be from 12 to 2. You can swing in anytime between 12 and 2.
Okay.
All right, moving on to the next item, we have a 2021 workshops are going to be announced at a later date. I'm assuming that's because of
COVID. I was having trouble trying to get some dates tracked down, and most of them may be virtual again, so we'll just wait and see what happens after the first of the year.
And I think Jennifer, you can speak to the newsletter discussion?
Yes, yep, you can go, Debbie, thanks. So Frank, Jeff, and I have had some conversations about the newsletter, and it's just something that we need to put on the record, and maybe vote on how the board members want to handle it going forward. In the past, apparently there was an agreement between one of the Retirement Services Administrators and the Genesee County Retirees Association that there would be a cost sharing for the spring newsletter, and that the retirement office, the GCERS, would pick up 100% of the fall newsletter. So going forward, I just need to know what the board's intentions are with the newsletter. Will there be any cost allocation to the Retiree Association, or will the Genesee County Employees Retirement System pick up 100% of that?
Anybody, what's your thoughts from the board?
Mr. Chair?
Yes, sir.
Yeah, I'd just like to, suggest, especially at this point in time, the lack of communication that we have just with this COVID stuff going on, things not feeling as accessible as they previously were, even though in some ways they're probably even more accessible than normal. I'd just like to recommend that we go ahead and pick up the entire cost of that. It's not that expensive of a process to have two communications throughout the year for the retirees. Thank you.
Anyone else?
If that was a motion, I will support that.
So moved.
Support.
We've got a motion and
I'll
motion
support
and
the
support.
support. I'll support the support, Mandelaris.
Okay. Should we make a?
Can you confirm that we're going back to 2? We eliminated
Yeah,
one.
and Mr. Young, I think earlier you spoke to 2 letters. We're just down to 1 now. Frankly, I don't see the problem with picking up the cost of postage for 1 letter. If Jeff, would it be possible for you to get a list of email addresses for people also, for the ones that are up to, using email just as a future cost savings?
Bill, if you're referring to the retirees, I only have a half a dozen or so email addresses. That's something that we have not asked for in the past. If we are going to utilize email as a means of sending this, of which I agree with, we need to do an effort to collect those email addresses from people. And that could be done. It could even be added to this newsletter to, submit those email addresses to some central or receiving point.
Yeah, I don't know. I think this year's letter's probably already been sent out. But if
we could do that in the spring letter, we could. I could work together with Jennifer on a receiving point for the email addresses, and we could build a method of mailing these out without the added cost of postage, et cetera, and printing. Well,
I don't think in 2021 there's going to be a spring. So if we just want to make a note for next year's fall letter, and in the meantime, if people want to, we just send the word out by word of mouth that we can collect it. But again, we're going to send it out a hard copy via mail anyways, so we'll just note it for next year. Do we need a formal vote on this, Frank?
As far as the cost allocation, Frank, do we need a formal vote?
Oh, I'm sorry. I thought I unmuted myself. Yeah, you have a motion on the floor, so you should vote on it.
Okay. All right. We will take a roll call vote. Madam Clerk?
I'm sorry. Do we still need, I thought we were, do you still need me to take a roll call, or are we just doing,
No, we're just going to take a vote on the motion to pick up the cost of the newsletter.
We did all those in favor last.
We did. Yeah, we did. I apologize. We're back to all those.
Okay.
So all those in
Thank you
favor
for
of.
clarifying.
Mr. Chair?
Yes, sir.
Just as a point of clarification, I believe my motion was for 2 newsletters to be sent out, not just one. So if that's the case, then, you know, if that's what the second person who seconded my motion believed to be the same, then that's okay. But that's what my motion was for, which would indicate we'd probably have a late spring newsletter.
Oh, I was under the impression we decided against the second letter. We were just gonna have one annual letter in the fall.
We did.
Okay.
Mr. Chairperson, my recollection of that movement was last spring, we just eliminated the last spring's newsletter. We said nothing about going forward on a regular basis of 1, 2, 3, or any newsletters. So I think this is a good point. The motion was for 2 newsletters. I supported a motion for 2 newsletters.
So what we've done all right, just as a point of, just so I'm clear, in the previous motion to skip the spring newsletter, that was a one-time cost savings. We're not going to do that going forward.
That was my understanding of what happened last spring.
This is Jeff Carpenter. My understanding was, I was with Brandon. I thought we determined we were only going to do 1 newsletter just because the cost savings that we're trying to attain throughout the whole thing. So, and then if we are going to do 2, why are we now going to take on 100% of both of them when the one was actually a split between us and the retiree association that puts extra information into the newsletter? It's not just a newsletter for retirees. I mean, I've read some of them; they're all over the gambit.
All right, we got to fix the first question before we get to the second one.
Mr. Brandon?
Yes, sir. Yes, ma'am.
I'm sorry, Chairperson. I was just going to say, if you guys can remind me of which meeting that vote took place, I can go back through my minutes and clarify what you voted on, if that's not out of line.
All right. How about if I'm going to table this until the December meeting, and that will give us time to research it and figure out just where we're at. And if we need to have a formal vote as to how many newsletters to send out, we can do that, and we'll be better prepared.
But Mr. Chair, we have a small problem here. By doing that, we're not sending out a newsletter till after the December meeting. We have retirees out there that are calling me on a regular basis, wondering where their newsletter is, wondering a lot of things. I think we should at least move forward on funding the cost of the fall newsletter and get it out as soon as possible.
Jeff, that's already been sent out. Did you get a copy of the email from the printer that it was delayed due to COVID and their office staff person was out? They've already mailed that. They mailed it this week.
I did receive.
Or last week.
I did receive a copy of the email indicating one of their staff had COVID. I have not personally received the fall newsletter, so that's why I'm trying to get it out, or was trying.
Yeah, I believe that it's already been mailed out and was already, that ship already sailed. We're moving forward. We're just,
Trying to address the cost.
we're having the question now becomes, what do we do in the spring 2021 and moving forward? Getting back to the original motion,
Mr. Chair?
on the floor. Yes, sir.
Since the one newsletter has already went out and there isn't an immediate need for this particular motion, I'd say, perhaps we could have staff to start calling and trying to, get email addresses or something to that effect from the retirees. And then maybe we could hopefully make this a moot point if we're able to get 90% of the emails, something like that by springtime. That way they'll have a few months to work on this.
I tend to agree. I think that's the best way to move forward, and my understanding is the retirement office is already amassing a list of emails for exactly that purpose.
Would that be okay with you, Jeff, through the chair?
Yes, I was not aware that the fall newsletter had been sent out. Again, I have not received mine. So, yeah, I would go along with that.
So I'll withdraw my motion at this time.
I'll withdraw my support.
All right, motion is withdrawn, and hopefully we'll be able to address it in December. Moving on, the approval of the minutes from October of 2020. Anybody have any changes or amendments there?
Motion to approve, Seifert.
Support, Young.
Support.
Seifert and supported by Young. All those in favor say aye.
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 Any opposed? None? So moved. We have nothing pending in old business. Moving on to new business and co-consulting. Go ahead, Mr. Kuhn.
Chris, I'll go ahead and stop sharing.
I take it that means you want me to take over?
If you would like to.
Sure. So I have a couple items for you today. All right, hopefully that's working. That you see the Genesee County, the investment performance review up on your screens?
Yes.
Okay. So, quick recap of where we were at the end of September with the markets. If you recall, we actually had a pretty good quarter. It did not end necessarily on a high note, as September was a weak month in the equity markets, but the first 2 months of the quarter, July and August, had been particularly strong, and so kind of drove those returns. Even though the S&P was up just under 9% for the quarter, the mid caps not quite keeping pace there, about 7.5%, and then small caps kind of coming in third there, about 5%. As we saw, kind of the sell-off hurt those a little bit more in the last month of the quarter. Really, driven by kind of the stimulus, the reopening of the economy. As I said, September got a little weaker as the second wave of stimulus kind of stalled in Washington. And kind of similar results on the international markets. That's the group in red up on the top. You'll note, decent single-digit type returns. The emerging markets actually were the best performing area, up almost 10% for the quarter. And is seeing a nice little rebound there. In fixed income, it was a relatively quiet quarter. So we saw rates kind of range bound. There wasn't a whole lot of movement within rates. The one thing we did see was that we saw the investment grade bonds spreads continue to tighten there, kind of following with the equity markets. And so if you're looking in those green bars at the bottom of the top chart, you'll note that Bloomberg Barclays IG was up about 1.5. TIPS actually did particularly well. They were up over 3%. And the overall market was up just over 0.5%. When we look at the full year results, U.S. equity markets continue to be kind of the best place to be, particularly large cap. So if you're looking at that S&P 500 up 15%, the Russell 1000 actually did a little bit better, about 16%. When we get down into the mid and small cap stocks, though, you can see it falls off pretty significantly there. Mid caps coming in under 5, and small caps, that Russell 2000, just barely breaking even. So really dominated by kind of large tech in the markets over the past 12 months. And you can see that kind of in the international markets as well. So that MSCI EAFE index, EAFE, That's kind of your developed markets outside the United States. You can see less than 1%. So think of Europe and Japan primarily there. Not a whole lot of return. Part of the issue with that benchmark is there isn't a ton of technology in it. So it's a lot more financials and consumer staples in that benchmark. And without the technology weighting, it really has kind of struggled to keep pace with U.S. markets. Where we have seen some decent returns, though, is in the emerging markets. Obviously, there's some technology in those. Think of like Samsung and Taiwan, Taiwan Semiconductor. Those are two very large names in that benchmark, as well as a couple of the Japanese stocks, Tencent and Alibaba, really driving performance there. But it's kind of the same story as the U.S. market, a handful of names really driving the performance of the emerging markets as they kind of represent, I want to say roughly 25% of the benchmark is in like 5 or 6 names on the emerging markets at this point. And then in the fixed income markets for the year, you'll note pretty decent returns there. Obviously, we saw rates kind of collapse, driving our fixed income markets much higher towards the end of last year and then in the first quarter of this year, and really driving performance there. So at this point, obviously, fixed income markets are really going to be challenged. You know, you're looking at yields on kind of your core portfolios in the 1 to 1.5% range. So, kind of stay tuned on that one. We can jump ahead. This is the quick asset allocation with our targets. The one that we're a little bit overweight in, you can see, is the international equities. It's really WCM. They've had a tremendous run, and we'll be using them here in the near future for cash needs. But if you look at our cash needs, we're actually kind of on the high end of our target there. And so we haven't actually had to raise money for some time. I look at this every month to see if it's time to make a change and actually go and kind of replenish the cash accounts. And we've been receiving some distributions from the real estate investments, and it's basically been covering the outgoing benefit payments. So as I said, at this point, we're still not recommending any liquidations, but the time will be coming here in the near future. Performance. So kind of good news on the capital market side. You can see about 4.5% total return at the total fund level. And that is nicely ahead of the policy index. The policy index was just under 4. So we actually outperformed there with managers that had nice performance relative to their benchmarks that kind of helped us. I will point out within the peer group, we're a little bit behind. A couple factors that kind of weigh on your performance. One is your domestic equities. We're using the low vol strategy, performed much better relative to the benchmark this time around, but still is a little bit behind the S&P 500. And then the other, there's kind of 2 factors that are related, both associated with real estate. So we have a pretty large allocation to real estate relative to our peers. Real estate was not necessarily a great strategy in this quarter. And then you also have managers that aren't reporting in that space. So kind of the combination of basically muted returns in real estate and some of your managers not even reporting in time for this report kind of hindered performance there. If you look out at the full year number, kind of a similar story here. You're up about 4.6%, nicely ahead of your policy index, but kind of in that bottom half of the peer group. Really more conservatively invested than most of your peers, and that's where we've kind of given up a little bit relative to them. When you go out to the 3 to 5 year mark, you'll note you're jumping into the top half, and kind of when we get a little bit further out, you're basically into the top third. So longer term performance has been very nice. As I said, more recently, lack of technology in the portfolio has hurt you a little bit. Underneath that, we start with the individual managers. I mentioned that low vol strategy. You can see it came in at about 8.5%. Remember, the S&P was up about 9-ish, so that's where we came up a little bit short. But you actually are in the top half of the peer group. So despite kind of lagging behind the S&P, what this is telling you is a lot of managers lagged behind the S&P this quarter. And a lot of it has to do with those, what I mentioned about a handful of stocks really dominating performance. If you're underweight the Apples and the Amazons in the portfolio, then you tended to lag this quarter. And in the case of Earnest Partners, we actually had very nice results from them in the small cap space. So you can see they were up over 4%. Their benchmark, which is value oriented, you can see was about 2%. So nice outperformance there. And you can see over the last year, relatively weak absolute numbers here, down about 4%, but you can see their benchmark was actually down 14. They've actually done a really nice job of kind of maintaining their value in what has been a very, very difficult space to invest. Longer term, look at their 3 and their 5 year numbers. They're significantly ahead of their benchmarks. Kind of a similar story with First Eagle. That's, another one of the value oriented strategies in the portfolio. A decent return, just over 4.5%, but a little bit short of the benchmark, which was up over 6. That's why we paired them with WCM, and you can see WCM was up almost 9. We have one on the value side, we have one on the growth side. When it's a growth-oriented market, you would expect to see WCM outperform. If we get a value-oriented market, we'd expect to see First Eagle. It's been a while since we've really seen value have its day in the sun. But we love both of these strategies longer term and think they make a great pair for you within that international equity allocation. On the fixed income side, yes. Someone have a question? No? On the fixed income side, Mackay Shields and SIT both had decent quarters for you. We did see within fixed income, that investment grade starting to come back, or at least continue coming back. That's been basically a tailwind for the managers since the first quarter and has aided their results. If we look over the last 12 months, both managers are up about 6.7, 6.8, kind of top half or top third of the peer group. So they're doing a nice job there and have been, for some time. No concerns there. And then page 10 has your real estate managers, the 2 PRISA funds. Decent results here, particularly PRISA 3. This is the more aggressive of the 2. We've seen some realizations there. Yes. No? Decent results, as I said, within the real estate. You do have on the next page your other kind of closed-end strategies. You'll see a lot of zeros as we haven't received the third quarter results from them. The expectations are on the Bloomfields. We'll see some positive results there. And we'll have to kind of wait and see in the real estate space. As I said, real estate's been a little bit tricky. We talked about it at the last meeting with the round table with the investment managers. Any questions, kind of performance related? All right. I'm going to flip to the other report. This is the October update. October not quite as kind to us. So you'll note that the S&P actually took a step backwards in the month, down about 2.7%. Actually, small and mid-cap stocks performed better. They were both in positive territory. Now, you can remember from the last report, there was a lot of room to catch up there. I think most people would tell you that there's probably better value in the small and mid-cap space at this point, that the large cap stocks look pretty fairly priced. There's probably better bargains, though, kind of as you move down in the capitalization and as you move towards value. But as I said, the market, just because there's better valuations, doesn't necessarily mean it's going to reward those. So we'll have to kind of wait and see. But kind of a rough first month to our fourth quarter. And you'll note even in fixed income, we gave back a little ground there as well as interest rates tended to move up a little bit. So you'll note that the U.S. aggregate was down about 0.5% for the quarter. we'll have to kind of wait and see. We're seeing rates kind of trend a little bit higher today. We're actually seeing a little bit of that value come back into play as well. So value did a little bit better there in October. And then today, as we got the announcement that Pfizer may be on the verge of a vaccine for the coronavirus, the markets kind of are jumping in some of the value plays. Now, a lot of the value ones are the ones that kind of got hurt by the shutdown. So if you're thinking like a movie theater or something like that, where all of a sudden you could say, hey, people can start going back out again. Those would be areas where you might see kind of this return to better valuations on their stock prices as we move forward. So, but we also are looking at maybe higher interest rates as well. So it's where we're at the end of October. As I said, so far November has been a little bit better. And here's your market values. And as I noted, if you come across this, you'll see WCM. We're about 14 million over in that, really based on the strong results the manager has done. So they will be in line probably to give up at least half of that to fund future benefit payments. And my guess is it might start coming in January, but it will all be based on the real estate portfolios and how much money we actually get from capital calls and how much we actually get back in distributions. And you can see we're sitting with about 11 million down there in the cash account right now, which is just over $2 million higher than kind of our target weight. And this was updated just at the end of October. So with that, I'll pause and take any questions. All right, not hearing any. The last item under my section on the agenda is related to Bloomfield 5. Remember, this is a alternative fixed income investment that the retirement system made, and they have called about 90% of your commitment to Fund 5. Some of this was rollover money from Fund 2 that's allocated to Fund 5. And the paperwork that they sent us was looking at kind of converting our Series A commitment into a Series B commitment, and they had changed some of the terms within the document. I've had some lengthy conversations with them about what they're looking at doing, and they have since revised the terms that were sent to you originally. So that is really kind of obsolete at this point. And so I'm not asking for any action by the board today. That we'll be seeing an updated version of this probably within a week or so, and we can address it at the December meeting.
All right, anyone have any questions for Chris? If not, thank you very much, Chris.
Thank you, everyone.
Thank you.
All right. Moving on to proposed meeting calendar for 2021.
Excuse me, Mr. Chair.
Yes, we need a
In the
motion.
past, okay, thanks.
Yeah, we need a motion to accept and file report.
Move to accept report. Kim Court.
Thank you, Ms. Courts.
Carpenter, second.
Carpenter, second. Any discussion? All those in favor?
Aye.
Aye.
Aye. Any opposed? None, so filed. Moving on to number 2, proposed meeting schedule for 2021. Chair will entertain a motion to accept.
I'll make a motion to approve Mandelaris.
Thank you, Mr. Mandelaris.
Russell.
Dan, is that support?
Yeah, support Russell.
All right, thank you, Dan. Any discussion? All in favor, say aye.
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 Any opposed? None. So approved. The C3, schedule of other governmental service purchase. Looks like there's only one.
Move it.
Support, Mandelaris.
Mr. Young, and supported by Mr. Mandelaris. Any discussion? All those in favor?
Aye.
Aye.
Any opposed? Ayes have it. We'll move on to schedule of billings and expenses, C4.
Young, move it.
Mr. Young.
Support.
Ms. Court, support. Any discussion? All those in favor, say aye.
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 Any opposed? Ayes have. C5, schedule of deceased retirees.
Young, move it.
Mr. Young,
Support. Move to accept it.
accept support from Mrs. Courts. On any discussion? All those in favor?
Aye.
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 Any opposed? So moved and accepted. C6, schedule of new retirees.
Young, move it.
Support.
Thank you, Mr. Young, and supported by Mr. Carpenter. Any discussion?
Yes, this is Mandelaris.
Yes, sir.
It looks like the first two started with the county or the road commission at the same time and are leaving at the same time?
Actually, it's an alternate payee and a retiree, so he passed away.
Oh,
I'm sorry, it's an Edro.
okay. All right, thank you.
You're welcome.
All right. Any, all those in favor?
Aye.
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 Any opposed? So moved. Moving on to C7, the schedule of rehired retirees.
Young, move it.
Thank you, Mr. Young. Carpenter, support. Any discussion? Doesn't appear we have anybody in jeopardy here. All those in favor say aye.
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 Any opposed? So moved. C8, the approval of an Edro for the Raisin couple.
Young, move it.
Support Mandelaris.
Thank you, Mr. Young and Mr. Mandelaris, support. Any discussion? All those in favor say aye.
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 Anyone opposed? So moved. Moving right along to the legal report by Mr. Judd.
All right, thank you. I'll make a couple brief comments before I turn it over to David Goldsmith, who I see is also on the Zoom meeting today. We briefly talked in the beginning about the new requirements for the Open Meetings Act, where if you're participating remotely, you need to state your physical location. So I appreciate everyone doing that. The amendments to the Open Meetings Act also allow you to continue to meet remotely for any reason whatsoever for the rest of the year. So next month's meeting, you can just meet remotely for whatever purpose that you want to. Starting in 2021, you can meet remotely or as an individual trustee participate remotely for only 3 reasons. 1, military duty. 2, a medical condition. Or 3, a state or local state of emergency as declared by the appropriate authority, whether that's the governor or the health department or your local county health department, county board of commissioners, so on. That's for only the calendar year 2021. 2021 ends and we hit 2022. The only reason for anybody to participate remotely is active military duty. So I'm not sure why the state legislature decided to be so narrow with their, but they did. So for now, we're good for any reason for next month. January 21 through the end of the year, we'll have to state one of those three reasons. And then that, unless this is amended, we'll have to only meet in person. But we'll see. That's a long time away. But wanted to make sure everybody got that and was aware of it. I don't have any other legal items to be updated today, so I will turn it over to David to speak about the securities report from Labaton Suchero.
Hi, good afternoon. David Goldsmith from Labaton. Good to see all of you, albeit remotely. Just very briefly, I don't have a very long report either. On the appeal that we're pursuing in the ISDAFIX case, I mentioned last month that we had recently put in our answering brief on the appeal relating to the distribution. I can report that we did receive the reply brief from the objector from Fortinbras, which I mentioned just in a one-liner in our in the report that we that's in the materials. As I speak, I'm actually realizing that I didn't send that to Frank and to Jennifer, so I'll get that over to you right now, as soon as possible. But I don't recall seeing anything in there that was of real note. And so now the appeal is fully briefed. We are then awaiting a hearing date from the Second Circuit, which is probably, a while out. They're pretty, full up over there. And once there's a hearing date, we'll let you know. And that's really all I have. Thank you.
All right. Thank you, Mr. Goldsmith. Entertain a motion to accept and file the legal report.
I'll make a motion for both reports, Mandelaris.
Thank you, Mr. Mandelaris. Support from Carpenter. Any discussion? All those in favor say aye.
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 Any opposed? Shall be filed. Moving on to D, informational items. I know in the past meeting it was requested we get a breakdown by employer of the 13th check. Has anybody got any discussion on that issue?
No, I don't, but thanks for the information. Appreciate it.
All right. Thank you, Jennifer. And if no one has any other...
I do.
Go ahead, John.
Yeah, maybe Mark can help out a little bit here. What about, or I'd like some clarification with respect to this W-4 form. We're supposed to be employees of the county. I don't understand that, but maybe somebody could explain it.
Crystal or Frank, do either one of you want to take that?
Crystal, if you don't mind, I think that's more of a county issue. It's my understanding the county was under an audit from the IRS, and the IRS had some sort of questions at some arrangements and how things were being paid out. So, Crystal, do you want to expand from there?
Sure. Yeah, we did have an IRS audit of our 2018 calendar year. As part of that process, the IRS said there's very clear guidance on anybody who's either elected or appointed to a board or commission that needs to be considered a W-2 employee. So that's why we sent out that information related to that change.
So what are we supposed to do now?
You just have to fill out the paperwork that Jennifer sent you, and then we would start paying you through the payroll system versus a check and then issuing you a 1099 at the end of the year.
Do we have to tell you what our social security number is?
Yes, because the W-2 that goes to the IRS,
We already know it.
need that on there, which we would need it for your 1099 anyway, previously.
So we have to mail this in to Jennifer?
Yes, you can mail it or you can bring
yeah.
it in if you feel more comfortable not mailing it.
I feel more comfortable mailing it.
For 2020, we are still going to continue with the 1099 because that's what's on file. So this will be going forward for 2021.
So I can wait till January to give you this, right?
Yes, you can.
Okay, thank you.
You're
Sure.
welcome.
Anyone have anything else? If not, shall entertain a motion to adjourn.
I'll
So
make a
moved.
motion. Support.
All right, all those in favor?
Aye.
Aye.
All opposed? Everybody have a good month.
Peace out.
Thank you.
Take care.
Have
Good
a good
meeting.